Good evening, everyone. Happy Saturday. Uh, Today I'm just going to be going over my trade recaps and just going over my weekly trade. Geez, how do I even word this? You know what? I'm not going to even cut it out. Uh, Pretty much just going to be doing a weekly recap of the trades I took. Took three trades, two winners, one loser. Or let's reframe that, one lesson, and we'll go ahead and get started. Also, just want to note this week I did start trading on a live account. I funded it with $2,500. Just trading it with micros, one contract each, just to kind of get the feel of what it's like to put my personal capital at risk compared to trading my funded accounts. But let's go ahead and get started. Let's share the screen. Alrighty, so the week started off at the 11th, ended the 14th. Pretty obvious. But starting with the very first trade, first trade was on gold. It was a very nice, short, very nice, quick, and easy trade. Sat in this for like I think it's like 5, 10 minutes, something like that. But let's go ahead and take a look. So, taking a look at the higher time frame, it was pretty obvious that we were still extremely bullish. However, we did have the previous 4 hour candle close. And, despite there being an upper wick, I was still bearish. And the reason why it was because the previous candle on the 1 hour closed bearish, showing a nice rejection of this key area of interest. So I knew short term that we could be scalping shorts, but I wasn't looking for a very extended move. I was looking for just something quick. So starting off the 1 minute, we had a nice type 3 shift where we had this high, we had a low, broke the high, and then after we took that low, waited for 7 o'clock candle to close so that we can get all the candle confirmations that we could align with. Once price pulled back, ended up taking a short, was in very little drawdown. I think I was in drawdown for like maybe like 1 point on gold, 10 pips, whatever you want to call it. Stop above this previous internal high and wrote it down to this target right here. Ended up sniping that. 5 minute had a nice type 2 bearish candle close. We closed beyond this level right here. The new 7 o'clock candle open, put in that upper wick, which I got in. 15-minute candle, we had the same situation where we had a type 1 bearish candle close. Obviously, this 15-minute candle close ended up closing bullish and continuing higher, but I had the right mindset of just scalping this trade. Here's what it looked like on the line chart. See obvious trend higher, took out these lows, pull back the retest. 1 hour, same thing. We had a type 1 bearish close, looked for that price to pull back and then flip lower. Took profit at this 1 hour level, which ended up being perfect because price ended up reversing and continuing higher. And yeah, so that was the very first trade, or that was the first trade of the week. Very solid, very nice. And now we'll go over trade number two. Trade number two was another long, or was another trade, took longs on gold. Um, I got all the candle confirmations. I waited till after 7 to get in. We had a 15-minute type 1 close, 5-minute type 1 as well. 30-minute did close type 1 bearish, which we did have that trading against us. The 1 hour did close type 2 bullish, in which I was looking to see if price would react at that area of interest to go higher, but we didn't. 4 hour also closed type 1 bullish. Overall, the trend was bullish as well, but one thing to note was that on the higher time frame, we were trading in this bearish area of interest. As you guys can see, this is where we had a 1 hour type 3 shift. We had a low high, broke those lows, rejected and pulled back and moved lower. Overall structure on the medium time frame, which is like the last couple hours, was looking bullish. Um, I think that, or I know, this is more of like in hindsight, but Taking a look, it was due for a deeper pullback on the larger time frame. If we take a look at the 15-minute right here, this is the 15-minute time frame. We can see that price had a nice type 3 shift to the upside, in which if I wanted to take longs, it would be a higher probability if I saw price have some sort of type 3 shift reaction into this level of area of interest and then continue higher. Because here, yeah, we do have like a small 1 minute type 3 shift for that entry model, but the range to the upside was just very limited. It was lower probability for price to continue higher after such a strong rally up over the last couple hours. This was during the pre-market session after such a strong move. Not even an hour, like within, yeah, about an hour, right? 5 minute even had a nice type 3 shift. Would have been nice to see a pullback just to have a better time frame alignment in that case. Short term, we were just seeing short term bearishness in this market or in that moment, but it is what it is. We learned from it. At least I got my bias correct. It's just more of the when that I got incorrectly. That was something I did pay attention to in journal. See, on the 1 hour, we did still create that bottom wick to flip higher. Just need a deeper pullback. Sweet. And I just want to mention that my thought process during these trades are fairly focused on what is good data because I'm tired of journaling trades that are like full of shit. You know what I mean? Like whether it's me missing a step, not waiting till after 7, those things are like, I'm focused on just being extremely conscious and just focused on following my strategy and following my plan step by step. So the thoughts of money never crossed my mind. When I took this lesson, I didn't really care. I knew it was going to be good data to journal, and that's all that mattered. And then this was the last trade. It was a banger of a trade. We had this was taken on NASDAQ, by the way, nice type 3 continuation shift to the upside. So starting off at the 4 hour, we had a nice closure above this area of interest. And if you take a look at NASDAQ on this day, we had here, let me pull it up in here if I can. NASDAQ at this time was ranging quite a bit. So we were ranging pretty heavily on NASDAQ, right? This is just the daily time frame, but you can see this was the key area of interest. On the 4 hour, we closed above this area and on all the other time frames as well. So I felt extremely confident that price was going to continue higher. This box was essentially that area of interest right around here. Once I saw that 4 hour candle close hammer bullish with that bottom wick, I was I knew that I didn't know, but I knew there was a higher probability of price to move towards the upside. So if we take a look, we have the 1 minute shift in structure right here. We have the high, low, high, break the low, and then take out that high. And then I waited for price to pull back. I could have gotten in right on this first candle, but I actually waited a little bit to see how this candle closed because I just saw volume coming in into the market with selling pressure. And for me, that kind of sketched me out a little bit. But once I saw that candle close with that nice wick, I took my entry right at the open of the next 1 minute candle, stop below the lows, let price ride. 5 minute, a nice type 3 shift as well. As you can see, we have low, high, took out the low, took out that high, and then pull back. I wasn't going based off of candle behavior for the 5 minute. It was just more of market structure. 15 minute looks solid. We had a nice type 2 candle closure closed above this level as well. And then when the new candle opened, price put in that wick. Pretty nice entry. You always want to take your 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 entry. So when it comes to candle behavior, you want to take your entries below the previous candle open. So let's say if you have a bullish candle close long, you want to be able to take a candle, you want to take your entry below the open so that price has a bigger range to potentially flip because price is a push and a pull. So when you get an entry below the candle open, you have more of a range to be able to take your to be able to ride your trade and also have more volume come into the market. As you can see, every time you, for a majority of the time, when you see a previous bullish candle close, you always see a bottom wick being created. It's just, it happens quite a bit, right? Here's a bottom wick. You probably have some sort of type 3 shift here. Bottom wick, flip bearish, upper wick, move lower, upper wick, move lower, upper wick, move lower. So that's just the nature of the markets. Prices are pushing a pull. That's something to keep in mind of. And when you align candle behavior with market structure, it allows for you to time when you should be getting into the market. And that's what you want. You want to be focused on being consistent, not consistently perfect. And at least for me, I would rather have a higher win rate than have a have a set risk to reward. You know, if I see volume dying, it's kind of telling me like, look, in this within the next 5 to 10 minutes, I probably shouldn't be sitting in this trade. But price just ended up moving to my target. Pretty much no drawdown at all. Price just kept riding and riding and took profits a little bit late. Did hit my final target, but at that moment or in the moment of the trade, I did feel a little bit of greed. Price or I did move my stops to break even at this point once we took out these highs. So I was completely fine with trying to let the trade run, but I was working on trying to let my winners run a little bit more. But price pull back, got sketched out. Actually, I think at that moment, price pulled back pretty deep and actually back to my entry. So I would have probably got stopped out break even. Let me see. Yeah, price ends up stopping me out break would have stopped me out break even. Let's show this. Ah, nice. See, so I ended up just closing it after seeing that wick, which totally respectable. We did have a final target at these highs anyways, so I can't even get mad. But those were the three trades that I took. Overall, very successful trading week. 2 of 3 for the week. Also traded with confidence. Despite me trading with my live account, I didn't feel really any emotions at all. I was just extremely focused on my process, my setup, my data. And that's all that matters to me because the last thing I want is to journal shitty trades because in my mind, I'm just thinking I'm already profitable, right? I have the skills to be profitable. I've shown profitability. Why would I do anything to hinder my success and almost tarnish my credibility as a good trader, right? And there will be times where I do have that, like here. I mean, the first day of February, that's kind of what I did. Took a super mid-ash trade. I don't want those. I'm trying to eliminate as many of those out of my data sample as much as I can because then it'll just give me so much more confidence. But I also develop the confidence from just journaling every single one of my trades because then it shows that it's kind of like the Hawthorne effect. It'll have you hold yourself accountable to your actions. So every day when I'm in the markets, I'm thinking, okay, I don't want to fuck this up. I want to make sure that my trades are solid. I want to make sure that my data looks good because if let's say a hedge fund were going to go up to me and I want to get hired by them, they're going to look at my data and if they see a bunch of bullshit trades, what makes you think they're going to trust you, right? So that's the way for me to build trust in myself. And also something that I've been doing as well is listening to the audiobook for Trading in the Zone. I've already read it a couple times, but I think listening to the audiobook has really helped me hone in on the information that the book provides because something about listening to it is extremely different. And one key takeaway that I did have was that naturally the human brain wants to seek certainty in uncertain situations. And when you have the idea that a trade is certainly supposed to go in your favor, but then the moment that it doesn't, you will naturally feel pain, right? But if you start thinking in probabilities and you think that you fully accept that the market is unpredictable, that is certainty as well. You are certain that the market is unpredictable. And that's how you also build confidence in yourself and in trading. Once you fully accept the certainty that the market is unpredictable and you can't control it, and all you can do is find a statistical edge, focus on the highest probability of what price is going to do in that moment, that is when you start getting into like the motion. They called it something else. They call it yeah, they call it the zone. You start trading in the zone because you've just fully accepted and detached from the idea of every situation, every trading situation being exactly the same, because it's not. Because in order for every trading setup to be the same, that means that you have to have the exact same amount of participants, buyers, sellers in that market at the same time, which is 0% possible. So when you fully accept the fact that it's just all probabilistic edge, that's when you feel like trading is unlocked. And that's something I think I've started feeling, I want to say like throughout January, like beginning of January, it's been quite different. I start focusing on finding what the higher probability trade is going to be. I come into the markets thinking, okay, look, I don't know what's going to happen. I really don't. Right. But what I do know is that the markets will have opportunities. It'll give you opportunities where it will show you when it's, let's say, when it's at your area of interest, which way will it have a higher probability of going? And once you find a strategy and back test it and figure out your edge and figuring out high probability setups, that's when trading feels unlocked, I know something I always focused too much on was psychology, but I remember Tom saying something how you can't really have good psychology when you don't even have a good strategy to begin with. Because how can you build good psychology on a strategy you have no confidence in, right? And so just being able to see all this data that I've collected, I started back in August, it helped me develop confidence in myself and in my trading plan and in my strategy. I remember strategy hopping for like maybe the last 3 years. First year, definitely had no strategy, just wanted to make money, was gambling. But then over the next 3 years, I definitely strategy hopped in a way, which kind of sucked because I probably would have been a lot more profitable a lot quicker if I had just stuck to one strategy. But the way I journaled my trades back then just didn't hit the same as the way I journal them now. Seeing all of this in front of me shows how much data that I've personally collected. This is this is all like these are all my results right in front of my face. Whereas previously, the way I journaled, I did journal through Discord, but the way I journaled it wasn't really optimal because I never went back to scroll and take a look at what I did right and what I did wrong. Sure, I typed it out and I mentioned what I did right and what I did wrong and my goals for tomorrow, but not being able to see it all in front of me like this, just it didn't allow for me to develop conviction. I think that's the word. Yeah, I couldn't develop conviction in my trading setup and strategy. So now that I have all of this data, it'll allow for me to refine what works for me and what doesn't. And then eventually I want to get my win rate up to at least 65, 70%. That's the goal. That's the goal for this year. And I know I can do it because with the way I trade, it's focusing on trading with volume, making sure that I am trading trading with the highest probability of me being right. Like, forget the risk reward. Yes, I agree. It is extremely important. And I do want to be able to have at least every trade I risk make at least 1.5 R, right? And like that would be beautiful for me. But I also know that sometimes the markets aren't always going to give you that. So being able to build my intuition in the markets and being able to just read when I should get out and when I should continue to hold is a skill that requires more screen time in itself. And over the years, over the coming years, you will definitely see the improvement in that. But yeah, that's kind of like where my thoughts are at right now. So pretty overall, last couple of weeks been trading very well, feeling very confident in myself in being able to execute my setups. Been positioning myself, been position sizing myself correctly, not over leveraging. I do think that beginning next week, I could work on sizing up on trades that I feel or deem as higher quality. Got to really trust my intuition there. But other than that, very feeling very good overall. I think one of the biggest game changers has been definitely waiting for that New York Open 7 o'clock. I call it the 7 o'clock Open, but I just have it as New York. I had New York pre 7 o'clock and New York 7 o'clock. So waiting for that 7 o'clock candle closure has just been really key, has been a really key factor to my recent trading success. I continue to look to hone into that, but I will look to see how the end of February pans out and see what I can refine and um what I can eliminate, what good habits I've been developing, what bad habits I've been developing. Some really good improvements this week is being able to is just trading my live capital. I think that's a pretty decent step in my trading growth just because it'll allow for me to have more mental resilience, allow for me to continue working on detaching from the monetary value, focus on just collecting data and building more trust in myself. That is something that is extremely important for me right now. Um, Goals for next week. Hmm, I did write it down. So my goal for the week of February 16th to the 23rd, I want to be able to edit my videos to make it look higher quality. That just means adding one or two new things to make it more entertaining. Probably including my P&L and ticks will be something because, that at least that's something I notice when I'm watching other people post their trades. Seeing that tick, like the P&L and ticks, or even if the dollar amount is what draws me to continue to watch the trade. At the end of the day, I want to be creating content where people stay around and actually watch the whole thing. And yeah, it might give them a quick dopamine rush of seeing like winning trades and whatnot, but also that'll eventually lead them to my page to then eventually click on any of the links I have in the future and, develop more trust in me as I continue to build this trading business of mine. Right now I'm in the stage of just continuing to build confidence in myself, collect that data, and then eventually I want to be able to, I don't even want to say create a course, but have like mentorship programs where I can explain how like the steps to trade. Eventually that'll come, but right now, just focusing on good trading every single day, every single week. And it comes from just building good habits. But I want to be able to create higher quality video edits for my trading shorts, and that's just adding something as minuscule as the P&L as it's running. Also want to create I want to create thumbnails as well for my videos so that when I post them, it just looks a lot more organized on my feed, you know. I took a look at my feed and it looks consistent, but it can use some more clickbait, if that makes sense. Yeah, clickbait. Let's see what else. And then for personal, I want to work on time blocking my whole week. I did it I did it yesterday, and man, it's really eye-opening because I notice how much time I waste going on my fucking phone. Like so much time, right? I have things planned out. I don't get to it sometimes because I'm either scrolling on my phone or I'm doing something else, you know? Like, let's say if I'm taking my girl to work, I don't mind. But I notice after when I get home, I don't do the things I should be doing, right? I should, like, if I have time, I could open a book, read. I could backtest. I actually don't really like backtesting, to be honest, because it eliminates the reactive factor of trading. So I treat every day as my backtesting session. So, excuse me. So yeah, that's kind of where I'm at right now. Another goal, work on sizing up my position if the setup permits. I do see a lot of people setting that goal and they think that they should size up on every single setup they think that they see, but it also depends on the quality of the setup. If the setup is not as high quality, if it doesn't look as clean, why are you going to put on more risk? It just doesn't make sense. So that's something I'm going to be keeping in the back of my head. Let's say if I think it looks really, really good, you know, throw in one more contract. Totally fine, right? You're still going to be risking less than $1,000 because usually my stops on NASDAQ are less than 25 points. Gold will be less than 3 points, right? Gold is, yeah, gold 3 points, give or take. And if it's like 4 or 5 on gold, then just size down to one, right? It just you adjust your size relative to what you feel comfortable with. And I want to just work on feeling comfortable with putting on more size on the setups that I have more confidence in. I've been trading one contract every single time, which is very good. Don't get me wrong. Like I'm proud of myself for doing that because it keeps my risk consistent. I mean, there are times where I'll even scale down to just trading micros. Like this day right here, January 2nd, started off the new year just trading micros because I wanted to rebuild confidence in myself. Totally fine. But now I think I'm at the point where I have good data. I have good trust in myself to know what high quality setups look like. And when they come to fruition, I need to act upon it. I need to be able to take advantage of the opportunity that the market is giving to me. And last but not least, continue to maintain consistency in my daily routine. This week, I don't think I broke my routine at all. Like I woke up at between 5:30, 5:45, did my morning prayers, did my daily meditation, did my visualizations. So I'm very proud of myself for that, just maintaining that consistency. I think that's what really translates into trading. How can you be consistently profitable if you can't even be consistent? Something Tom has always said. So continue doing that and over time things will just fall into place. It's like Tetris. Once you start putting one block down, putting another one in, you start building that momentum and you can start adopting more good habits. It starts with just adopting one good habit first, and then you stack on a bunch of other good habits. Like for me, one good habit that I have is consistently going to the gym, right? I'll give myself a rest day here, there, but now it doesn't feel like I need to put effort anymore. After I'm done trading, I get my ass up, I put on my clothes, and I go to the gym. It's so subconscious at this point, which is great. Now I need my trading to be like that. I need my executions to be like that. Once I see a setup that I feel is high probability, which also comes with, trusting your intuition as well, but also being subjective, like having a balance between the subjective and objectivity of trading. So I could have my strategy might not have I might not need to follow my strategy mechanically, but if I trust my intuition enough, I should take the trade. That's something else to work on. But other than that, a lot of growth so far over the last month and a half. So I'm extremely proud of myself. I'm definitely going to be looking back and watching these videos later, and it's going to be very exciting to see. But I have the mindset already. Like I know what I want. I know how much money I want to be at least making this year. I'm definitely cracking six figures this year for sure. And just my habits have really been proving that it's gonna come really soon. So, I want to even say it's coming now, right? There's no future. It's all about now. What can you do now? And yeah, like look at all this. Like, this is all me. Dude, this is straight up all me. Like I feel proud of myself for this. Sometimes I don't take the time to reflect on it, but this is some people don't have the courage to even journal their trades because they don't want to hold accountability to themselves. So I'm extremely proud of myself. I know that when I keep doing this, the money will come. Like this all come like my recent successes come from not thinking about the monetary value, just focusing on growing internally. So, I think I'm gonna cut it right there. I'm probably just blabbing on at this point, but this is my journey. I'm the movie. I'm the director of my movie, and I'm glad you guys are watching. I hope that you guys also focus on creating your own movie, and I hope you guys also all see the potential that you have in yourselves because if I can do it, you can. I know it sounds so cliche, but it's extremely true. There's no intelligence you need in the markets. Every profitable trader that you see, their results come from their consistent habits and their consistency in their life, their discipline, how they carry themselves. So you're there. Like you can get there extremely quick. You just need to start thinking like a profitable trader. But I'm gonna end it off right there. Very great trading review for the week. And I will go ahead and see you guys next time.